This is your technical update from the LMAX Exchange Research and Analytics Desk for Tuesday, February 23rd, 2016. Euro dollar. So the euro has now come back to test some key previous resistance turn support in the 110 area over the past couple of sessions. The latest breakdown does warn of the possibility of a broader resumption of this more intense longer-term downtrend, with the market potentially seen back towards next key medium-term support at 107.11 and then 105.21 further down. But right now 110 is going to be the key level to watch. If we close below 110, this will strengthen that outlook and accelerate declines, while inability to close below 110 followed by a break back above the recent high at 111.25 would do a good job of maybe suggesting interim higher low and push back towards the recent highs that we saw just shy of 114. So 110 is going to be the key level to watch on Tuesday. Sterling dollar. So cable continues to remain under pressure, with the market breaking down to a fresh 7-year low below that previous 7-year low or near 7-year low at 140.80, trading to 140.57, 140.58 thus far. But there is risk for deeper setbacks, and if the market establishes a daily close below 140.80, this could open the next major downside extension and measured move objective back towards the 2009 multi-year base, which comes in at 135. So that downside extension coincides with the retest of the measured move objective 2009 low at 135. At this point, a break back above 144.08 would be required to take the immediate pressure off the downside, while a pushback above that lower top that we're seeing at 146.68 would be required to officially negate this intense bearish outlook. Dollar yen. So dollar yen is now back under pressure, and it looks like the market wants to carve a higher low at 114.87 ahead of the next major downside extension below that recent multi-month low at 110.98. Look for a break and close below 110.98 to open the next major downside extension in this market towards the 107 area further down. At this point, only back above some previous key support at 115.97 would compromise the bearish outlook for dollar yen. Euro Swiss. So Euro Swiss has been consolidating in recent trade, but ultimately, while the market holds above 109.50 on a close basis, there is risk for a higher low and fresh upside extension back towards and eventually above those recent multi-month highs at 112. If we do see a close below 109.50, this could suggest that the market is poised for a more significant correction back down towards the 108 area. Ultimately, though, while the market holds above 107.15, the recovery outlook remains intact. Aussie dollar. So Aussie continues with its impressive recovery out from those recent multi-year lows at 68.27, with the market now trading up towards a critical 78.6% fib retracement at 72.65 off of that key 73.85 move that was seen back in late 2015 down to this recent multi-year low that was seen on the 15th of January. At this point, additional upside beyond that 78.6 fib will be hard to come by, with the market ultimately seen well capped in favor of what should be the next lower top and fresh downside extension. Ultimately, only back above 73.85 would compromise the bearish outlook for Aussie dollar. Dollar CAD. So dollar CAD continues with its intense correction out from those recent near 13-year highs at 146.90, with the market now trading down just shy of a critical rising trendline support off that May 2015 low. At this point, don't rule out the possibility for a test of that trendline, which comes in around the 136 area, before the market considers fresh upside and a bullish resumption. Kiwi dollar. So Kiwi has rallied back up in recent trade above 67, with the market approaching critical resistance in the 67.52 area. But ultimately, it looks as though this broader downtrend will remain intact as the market looks to be well capped into the 67.52 area or ahead of 67.52 in favor of the next downside extension. A break back below recent lows at 65.45 will be required to open the door for an acceleration of declines back towards next key support at 63.47 further down. But again, ultimately, rally should be very well capped, with only a break back above 69 to really compromise the overall bearish bias in Kiwi dollar. SPX 500. So although we've seen a nice little recovery in the S&P 500 over the past several sessions, the market should now look for a lower top in favor of the next major downside extension below 1808 and towards 1700 further down. At this point, previous support now turn resistance at 1993 should really cap any rallies, while only back above 2000 would take the immediate pressure off the downside. Gold. So although we've seen some setbacks in gold from recent highs all the way up towards the 1265 area, the market remains highly constructive at this point following the break back above 1200, which signals a structural shift off those multi-year lows that were set in 2015 at 1046. At this point, look for a higher low to carve out somewhere above 1150 ideally in favor of the next major upside extension towards the January and also 2015 high at 1307 further up.